Hello, everyone, and welcome to today's Strategic Source webinar. This is David, the session producer. Thanks for joining us, everyone. We are ready with the topic, Employee Retention Tax Credit, the PPP nobody is talking about. And we'll have our CEO here at Strategic Source, Doug Austin, come on in just a moment to introduce our guest presenter. So let's get things underway. Doug, you can go ahead and open up your camera and audio. Take it away.
Well, welcome everybody. Thank you for joining us today. I'm talking to you from Minnesota, where last night we had about 60 degrees and rain, and today we have 20 degrees and freezing. So quite a contrast. You know, we have a series of webinars that we started this year in June with innovative suppliers, and the topic that we're going to talk about today is obviously part of that series, but we're endeavoring to bring new innovative suppliers in expense categories, audit and recovery categories, and then new revenue categories. And I would say that the session that we have today with the Withum group fits in that middle one, the audit and recovery categories. We're going to talk about employee retention tax credit, which is, I just learned myself 2 weeks ago. So from personal experience, can be a very revealing opportunity to recover some tax dollars back from the government. So the sessions that we've been delivering since June are available on our website. I'll talk about that a little bit toward the end of the session. But I'm really pleased today to present Sebastiano Benquita. He's a CPA, works with Withum, and he's going to walk us through the Employee Retention Tax Credit, the PPP nobody is talking about. So Sebastiano, take it away, please.
Thank you, Doug, for that introduction. Appreciate it. So what will you learn today? Today we're going to learn about what the Employee Retention Credit is, the qualifications considered for the Employee Retention Credit. I'll give you a bit of background on the differences between the 2021 Employee Retention Credit and the 2020 Employee Retention Credit. I'll also explain the key eligibility differences between the 2021 credit and the 2020. I'll review gross receipts thresholds, average employees used as a base measure, and the maximum credits that you're allowed to claim, as well as the mechanism by which you apply for a refund. So who's Withum? Withum is an advisory, tax, and audit firm, and we solve problems in the areas of advisory, tax, accounting, and insurance, and we also offer, Withum offers wealth planning opportunities. So when you have a chance, I do ask that you visit withum.com. So our advisors can assist your business by maximizing your operational efficiency, cybersecurity, and data processes through integrated technology and strategic planning. Our tax department can recommend tax-saving opportunities tailored to meet your individual and business goals and objectives, whether you're locally or globally based. We can provide an in-depth analysis of your financial statements, internal controls, and overall business strategies to help minimize risk and maximize growth. At Withum Wealth, our investment and wealth advisory solutions firm, we offer wealth planning, tax minimization, business succession planning, customized investment management, stock-specific diversification, as well as socially responsible investing. Some of the industries we service include construction, dealerships, financial services, government and government contractors, life sciences, and healthcare, just to mention a few. When you visit our website, you'll see a variety of other services we offer that I haven't mentioned here. Some of our offices are located on the West Coast in San Francisco, Irvine, and Carlsbad, and on the East Coast in New York City, Princeton, and Boston. We also have offices in between the East and West Coast, for example, in Florida and Pennsylvania. We do have an office internationally in India as well. Me, myself, I'm a CPA, and I've been servicing dealership clients for well over 20 years in the area of tax and accounting, as well as assurance. And I focus on privately held entities and individuals. So what is the employee retention credit? The employee retention credit is a fully refundable credit for certain wages paid to employees during a specified period of economic hardship. Economic hardship, for purposes of the employee retention credit, relates to a full or partial mandatory business shutdown or a significant decline in gross receipts. We'll cover the economic hardship thresholds in more detail in the coming slides, as well as the tests that are used to measure the decline in gross receipts and to measure if a business would be eligible for the employee retention credit. So when was this credit born? It was enacted as part of the CARES Act initially on March 27th, 2020. And since the CARES Act, it has been expanded further as a result of many questions that arose, whether it was meeting its intended effect. Legislation was introduced very quickly, and as questions were posed, it became evident that many items were not clear-cut. And so some additional bills were passed to close some of those questions or provide more definitive guidance. One example is the Consolidated Appropriations Act of 2021, which came out or was passed on December 27, 2020. One of the main enhancements of this act was to eliminate the ban on employee retention credit if a taxpayer also obtained a PPP loan. So when the CARES Act first came out, if you obtained a PPP loan, you were not allowed to apply for the employee retention credit. The Consolidated Appropriations Act reversed this, said if you have a PPP loan, you can still apply for the employee retention credit. So that was a big win for the taxpayer. It also extended the employee retention credit into the first two calendar quarters of 2021, Q1 and Q2. So originally the employee retention credit was meant for the period of 2020. Well, the Consolidated Appropriations Act allowed the credit to be applied in 21 for Q1 and Q2. And it also made the credit more generous, as you'll see in the coming slides. There's some big differences between the 2020 and 2021 credit. Another enhancement of the Consolidated Appropriations Act was it raised the cap of entities that can apply for this credit. So the cap was at average full-time employees of 100 for the 2021 ERC. When the 2020 ERC, when the 2021 ERC was introduced, the cap was raised to average full-time employees of 500. Again, another big win for the taxpayer. Another act that enhanced the ERC was the American Rescue Plan Act of 2021, also known as ARPA, passed March 11th, 2021. What this act did was it extended the employee retention credit through December 31st, 2021. So originally under the Consolidated Appropriations Act, the 2021 credit was only available for Q1 and Q2, the first two calendar quarters. ARPA went ahead and extended the 2021 credit to Q3 and Q4. It also added additional eligibility criteria for the recovery startup businesses, which really has to do with businesses that came into being after February 15th, 2020. The ARPA also extended the statute of limitations on the ERC from 3 years to 5 years. The statute of limitation refers to how much time you have to file an amended return. And I'll get into the amended return because this is going to be the mechanism by which you apply for this credit. Now, one thing to note is the recently passed Infrastructure Investment and Jobs Act that was signed into law on November 15th did roll back the 2021 ERC for Q4. So the 2021 ERC is now only available through Q3. So Q1, Q2, Q3, the not available for Q4 as far as 2021 goes. And we are ready for our poll. So, does obtaining a PPP loan disqualify someone's eligibility for the employee retention credit? So I'll give a few more seconds here. We've got 50% response rate. Give you guys about another 10 seconds. Okay, we'll be closing the poll in 3, 2, 1. Let's share the results. So the poll came in at 90% false and 10% true. Well, 90% false are correct. Under the CARES Act, it would have been true. PPP loan would have disqualified you from applying for the Employee Retention Credit. However, under the Consolidated Appropriations Act, that is now false. You can apply for ERC even if you applied for a PPP loan. Good job, guys. So, what makes you eligible for the 2020 Employee Retention Credit? If your business had either a full or partial suspension of operations, or if you had a quarterly drop in gross receipts by more than 50% compared in 2020 compared to the same quarter in 2029, and continuing through the quarter where gross receipts are at least 80% of the same quarter in 29. Or I'll explain that to you. So let's start with the either full or partial suspension of operations. So back in 2020, there were several states that mandated businesses to shut down. And this would allow such businesses to be eligible for the Employee Retention Credit because it constituted a full suspension of operations. Some of the first states to shut down were California, New Jersey, and New York, just to mention a few. Now, a partial suspension of operations applies in the case where more than a nominal portion of a business's operations are suspended. The IRS defines a nominal portion as less than 10%. So I'll use the car dealership as an example. A good example would be a dealership because they had both essential and non-essential aspects of their businesses. So for example, the retailing of vehicles were suspended. However, the servicing of vehicles were deemed essential in some states. So one could argue that the retailing operations are more than a nominal portion of a dealer's business operations. So here again, we see eligibility potential for the Employee Retention Credit under a partial suspension. Next is, so if you don't qualify for either full or partial suspension, next would be gross receipts. So what does gross receipts mean? So under Section 448C of the Internal Revenue Service Regulations, gross receipts means gross receipts of the taxable year and generally includes total sales, net of returns and allowances, and all amounts received for services. In addition, gross receipts includes any income from investments. For example, it can include interest, original issue discount, tax-exempt interest, dividends, rents, royalties, and annuities, whether they were derived in the ordinary course of the taxpayer's trade or business or not. So again, to use the example of an automobile dealership, we would look at the quarterly dealer financial statements for 2019 and 2020 and compute the sum of sales and other income to arrive to gross receipts. We then would compare the respective quarters to compute the percentage change. The drop in gross receipts needs to exceed 50% when comparing quarters for 2019 versus 2020. So for example, in quarter two, let's say 2019, quarter two gross receipts are 100,000. And in 2020, quarter two, gross receipts are 45,000. The drop of 55,000 as a percentage of 100,000 clearly exceeds 50%. So in this case, quarter two would qualify for the employee eligibility for the employee retention credit to start looking at the computation. Now, next we will look to quarter three of 2019 versus quarter three of 2020. And let's say the drop does not exceed 50%. Not all is lost. The regulations allow us to say, hey, since quarter two qualified, it was an excess of 50% drop. Since quarter two qualified, if the quarter three 2020 gross receipts are below 80% of quarter three 2019 gross receipts, then quarter three would also be eligible. So another example, we qualify in quarter two in excess of 50%, and we look at quarter three. So let's say quarter three 2019 gross receipts are 100,000. And in quarter three 2020 gross receipts are 65,000. The quarter three 2020 gross receipts are 65% of quarter three 2019 gross receipts, well below the 80% threshold, and therefore Q3 would also qualify to be looked at for the employee retention credit. Now, so that was the 2020 ERC eligibility. This slide is the 2021 ERC eligibility. So the full or partial suspension test remains the same as it did for the 2020 test. However, if you don't pass under that test and you need to look to gross receipts, the gross receipts test changes a bit. The measurement changes. Here, the decline in gross receipts needs to be more than 20%, whereas 2020 says that decline in gross receipts needs to be more than 50%. And here, the 2021 quarters are compared to the respective 2019 quarters. If the business was not in existence in 2019, the taxpayer will be permitted to use 2020 in place of 2019 for purposes of the drop in the gross receipts test. Again, a key difference in the reduction in gross receipts test between 2020 and 2021 is the measured percentage of 50% versus 20%. I apologize. 1 second. I'm sorry, I did not go to that original slide. I apologize for that. So let's say we are eligible for the employee retention credit. Let's start with 2020. What wage period are we looking at? We are looking at March 13th, 2020 to December 31st, 2020. And the wages that would qualify would be up to $10,000 in wages, including qualified health plan expenses per employee for all of 2020. Qualified wages are generally limited to wages and compensation paid to employees between the wage period, including health benefits paid by the employer. Qualified wages do not include sick leave wages, family leave wages, or wages used to obtain the PPP loan forgiveness. Again, you cannot use wages used in PPP loan forgiveness when looking to qualified wages, but you're not disqualified again from applying for the ERC. These wages are excluded for purposes of calculating the employee retention credit. So when the average number of full-time employees exceeds 100 for 2019, then the definition of qualified wages changes. The definition would be wages paid to an employee for time that the employee is not providing services due to either one, a full or partial suspension of the employer's business operations due to a governmental order, or two, the business experiencing a significant decline in gross receipts. So basically that means, did you pay someone to stay home? So let me clarify. You look to your average full-time employees in 2019. If your average full-time employees in 2019 are less than 100 or less, then the definition of qualified wages includes wages and compensations paid to employees as well as health benefits paid. However, if your average full-time employees in 2019 exceed 100, then your qualified wages are only composed of for those employees that you pay to stay home. So there is a distinction based on the full-time employee threshold, looking at 2019 as a base year measure. So keep in mind that the maximum qualified wages are $10,000. So if Joe Smith earns $95,000 a year in 2020, then up to $10,000 would qualify. If John Doe worked for a short period of time and earned $6,000 in 2020, then up to $6,000 in wages could qualify. So for 2020, the maximum credit is 50% of the qualified wages we discussed. So if you get the maximum qualified wages for an employee of $10,000, then 50% of that would be $5,000. So $5,000 would be the credit for that qualifying employee. So if Joe Smith earns, again, $95,000 a year in 2020, and let's say up to $10,000 of those wages would qualify, thereby translating to a $5,000 credit for 2020. If John Doe worked for a short period of time in 2020 and earned $6,000, then up to $6,000 of the wages would qualify, translating to a credit of $3,000. So the qualified wages is your cap, and once you reach your cap, you apply the 50% threshold for 2020. So in this slide, we are differentiating the covered employees based on average number of full-time employees, which I touched upon before. So if the average number of full-time employees in 2019 was less than or equal to 100, then the wages of all the employees are looked at for purposes of qualified wages. If the average number of full-time employees in 2019 was greater than 100, then only the wages of employees not providing services, again, those that you pay to stay home, are looked at. Again, even if you apply for a PPP loan, you can still apply for an employee retention credit. And again, wages used for the PPP loan forgiveness cannot also be used to claim the employee retention credit. So we're still looking at the 2020 qualifications here. And we are ready for our next poll. What is the maximum employee retention credit per employee for 2020? I'll give you guys about 10 more seconds. Okay, closing the poll in 3, 2, 1. And let's share the results, please. So 68% answered 10,000 and 21% answered 5,000 with 11% at 7,000. So the correct answer is the maximum employee retention credit per employee in 2020 is 5,000. The 10,000 represents the qualified wages. Once we determine the qualified wages, then we apply 50%. So the maximum qualified wages that can be used are 10,000. 50% is 5,000, which gets you to the employee retention credit. So the correct answer is 5,000. So the credit amount is 70% of qualified wages. The maximum is $7,000 per employee per quarter. That translates to a total maximum per employee of $21,000 for 2021. So for 2021, the maximum credit is $7,000 per employee for quarters 1, 2, and 3. So if Joe Smith averages earnings of $25,000 a quarter, then up to $10,000 of wages for quarters 1, quarters 2, and quarters 3 could qualify, thereby translating to a $21,000 credit for 2021 just for Joe Smith. So think about multiple employees qualifying. These credits could add up. If John Doe worked for a short period of time and earned $6,000 in one of the qualifying quarters, then up to $6,000 of wages could qualify, translating to a credit of $4,200. So 70% of the $6,000 is the $4,200. So for 2021, the definition of covered employees changes a bit. And again, this is as a result of enhancements from the various other bills that were passed after the CARES Act. So if the average number of full-time employees in 2019 was less than or equal to 500, then the wages of all employees would be considered. If the average number of full-time employees in 2019 was greater than 500, then only the wages of employees not providing services. Again, did you pay anyone to stay home? If the business is severely financially distressed in Q3, looking at the decline, if the gross receipts in Q3 2021 versus 2019, the decline is greater than 90%, then the ERC will include all of the wages, even if the employer has more than 500 full-time equivalents under the severely financially distressed test. Again, the 2021 ERC is available even if a PPP loan was obtained. And again, the wages used for PPP loan forgiveness cannot be used to claim the ERC. So what does that mean? That means that when we're looking at what constitutes qualified wages, we would start with total wages. We would identify if there's any family leave or sick leave pay, if any portion of the wages were used towards PPP loan forgiveness, and we would carve out those items to get to the true qualified wages. And then depending on what the true qualified wage is, we would then calculate the credit. So up to this point, we have discussed what the employee retention credit is, what tests need to be passed to be eligible, and how the credit is computed. But how do we actually apply for the credit? This is accomplished by filing amended payroll returns, specifically Federal Form 941. After determining the qualifying quarters and credits, those specific quarters need to be amended on Form 941X. The resulting credit is refundable to the business entities. Again, the statute of limitations was changed to 5 years, so you have 5 years to file the amended return. Keep in mind that this credit will reduce your payroll expense and will result in taxable income. A few other items worthy of mention include aggregation rules. The ownership of affiliated entities needs to be reviewed to determine if they are considered an aggregated group. This is important because in the aggregation process, the combined receipts and average number of employees are combined and then tested for eligibility and could have different results from standalone testing. So basically what that means is if you have company A, B, and C, and they are considered, they are affiliated and considered an aggregated group, you would look at all of the gross receipts of A, B, and C, 2020 versus 2019, or 21 versus 2019, and measure that decline. You would look at all the employees for the 100 full-time equivalent employee test or the 500 full-time equivalent employee test. You would look at it, everything together. That would probably give you different results than looking at company A alone versus B alone versus C alone. Health insurance costs. So remember, the employer portion of health insurance paid can count towards qualified wages and help to maximize the credits for both 2020 and 2021. So example, you pay John Doe $6,000 of qualified wages and another $500 toward health insurance. The total qualified wages in that example could be $6,500. And so your 2020 ERC, 50% of that would fetch you about $3,250. The American Rescue Plan Act of 2021 also introduced additional eligibility criteria for recovery startup businesses. A recovery startup business is an employer that is not otherwise eligible under the full or partial shutdown rules, or not eligible under the gross receipts test, and began their trade or business after February 15, 2020, with average annual gross receipts for the 3 tax years preceding the quarter in which it claims the credit of no more than $1 million. So this is geared more towards smaller businesses that started up or were formed after February 15th, 2020. So what are the key eligibility differences between the 2020 ERC and 2021 ERC? So both look to see if did the business have a full or partial shutdown. That's the same. The difference is in the reduction in gross receipts. So in 2020, we are testing to see if reduction in gross receipts between the quarters of 19 and 20 was greater than 50%. And in 2021, was the reduction in gross receipts greater than 20%. That would be the key eligibility difference between the two. So as far as the full or partial suspension being a qualifying factor, it's a 3-part test. And the 3-part test is basically a government order restricts operations. The order limits commerce, travel, or group meetings. And the order affects the typical operations of the business in a non-trivial manner. Again, I'm giving you some background information. This is not on a slide, so I apologize if you're looking for a slide, but this is just background information. The government order includes federal, state, and local orders. Statements in the press conferences are not considered government orders. Interviews with the media, declarations of state of emergency are not considered government orders. State of emergency unless it limits commerce, travel, or group meetings, which is one of the criterias. More than a nominal portion of the business must be affected. We had mentioned this earlier on. Safe harbor offered by the IRS provides that nominal is less than 10%. Examples that do not meet partial suspension would be if the business partially closed but can still run through telework. Does the employer have telework capabilities? What's the portability of the employee's work? Do they need a presence, or can the employee work from home? However, if the decline in gross receipts is greater than 50 for 20 under the 2020 test or greater than 20% under the 2021 test, then you can qualify using that test. So we look to gross receipts reduction test by quarter if we don't qualify under the full or partial suspension. Again, for 2020, the reduction needs to be greater than 50%. And for 2021, it needs to be greater than 20%. Remember, we are comparing the 19 quarters to the 2020 and the 19 quarters to the 2021 quarters. For the 2020 quarter, it could be any single quarter and does not need to be related to COVID-19. If you qualify for one quarter, and again, I'm recapping here. If you qualify for one quarter, you automatically get the next quarter because you stay eligible through the quarter you establish gross receipts rise above 80%. So back to one of the earlier slides, I had an example of $100,000 in Q3 for 2019, $65,000 in Q3 for 2020, and the reduction was 65% less than 80. That's an example of remaining eligible under a rise of 80% and making that quarter eligible for the ERC. For businesses that weren't in existence in 2019, they can substitute again the 2020 quarter during the 2021 gross receipts test. So in summary, the 2021 ERC is based on the existence of partial or full suspension of operations and or a decline in gross receipts of more than 50%. It's a fully refundable tax credit that's equal to wages paid between March 13th, 2020 and December 31st, 2020. To employees up to a maximum of $10,000 per employee for 2020. The maximum credit for wages paid to any employee is $5,000. So in 2020, maximum is $5,000 credit for each employee that would qualify. For 2021, again, based on the existence of a partial or full shutdown, or if there was a substantial decline in gross receipts of more than 20%. And in 2020, if you have less than or equal to 500 full-time employees based on 2019, then all qualified wages, all employees can be looked at. If you employed more than 500 in 2019, your full-time average was more than 500, then we're only looking at employees that you paid to stay home. For 21, it's also a fully refundable tax credit, which is equal to 70% of wages paid for each quarter, quarters 1, 2, and 3. So up to $7,000 per quarter, which translates to $21,000, up to $21,000 per employee for 2021, much larger than the 2020. One thing to note, which is a good thing, gross receipts test does not include PPP wage forgiveness amounts. PPP wage forgiveness amount is excluded from the gross receipts test. And we are now at our last poll, I believe. Forgiveness of a PPP loan can be included in gross receipts test. True or false? Give you about 5 more seconds. And let's end the poll. And we share the results. And those that answered false are correct. Forgiveness of, yes, false. Forgiveness of PPP loan can be included in gross receipts. No, we do not include that in gross receipts. I think I am ready to take some questions.
All right, Sebastiano, thank you very much. Everyone,
Thank you.
there, if you hover over your screen with the mouse, you'll see a Q&A box appear on the bottom there, and we'll be monitoring that for the balance of the time. And Doug, certainly you're welcome to come back on now too for the Q&A time. Let's take a look at this one. All right, let's begin with this one. What is defined as nominal?
IRS defines nominal as less than 10%. Less than 10%.
All right. Here's another. When determining average number of employees, what is the reference year?
The reference year is 2019. So when you're testing the 2020 ERC, it's full-time, 100 full-time employees is that threshold of whether you're going to look at all qualified wages or just of those you paid to stay home. So you would look to your 2019. What was my average full-time employee for 2019? With the 2021 ERC, you would look to, again, 2019, and that threshold is 500 full-time employees.
Again, you can type in questions for us via the Q&A button at the very bottom. Attendees, go ahead and click on that button, and you can get a hold of us here. Here is another. Do terminated employees impact the ERC?
So yes and no. So for example, let's say they do not, because their wages are qualified. They are in the calculation. We look at the payroll reports. We look at who was employed at the time, who you retained in that quarter. And so if the employee's wages are in Q1, but they were terminated in Q2, then we would look at Q1 wages and try to qualify the Q1 wages. If obviously there would be no Q2 wages, assuming they were terminated in Q2. So it's the qualified wages for when they were employed or retained.
All right.
I do see a question here that I'd like to answer.
Go ahead.
So I'll read the question. If the business is receiving employee retention credit for a covered period and the tax is still removed from the employee's check, are employers required to reimburse the tax removed from their pay? No, I am not aware of any provision or any requirement to reimburse the employee for any tax. Remember, this is not a credit on the tax, it's a credit on the wages because we're looking at qualified wages. So up to $10,000 of wages qualified, and so the credit is based on wages. So there would be no basis to reimburse for tax.
All right, here is another. Are forgiven PPP funds included in gross receipts?
No, they are not. When calculating your reduction in gross receipts, you are not including the PPP funds that you received.
There's another one here, Sebastiano. When opportunity presents, can you go back and display slide 9?
Sure.
Can you just speak to that again, if you would, please?
Sure. So either full or partial suspension of operations, obviously. And if you don't qualify in 2021, if you don't qualify, then you're looking to the quarterly drop in gross receipts when you compare quarters 21 versus quarters 2019. If the quarterly drop is more than 20%, then you can qualify for that quarter's employee retention credit. Or qualify, look at those wages for that quarter to calculate the employee retention credit is what I should say.
Okay. And I think my own experience was that was something that we looked at in 2021. Again, the ERC is not applicable to 2020 21 Q4. Is that correct?
That
Just
is
1 through 3.
That is correct. Under the recent act that was passed back on November 15th, that credit was rolled back. Q4 was no longer applicable. It was originally, and then it was rolled back, unfortunately.
So, Sebastiano, one of the questions that I have here too, and I know we got a few minutes left, for those employers that are applying for that ERC, my understanding is that the IRS is a bit backlogged. And so when will that benefit be received and how will it be received? Will it be a check or a credit, or how does that transpire?
So I agree. The IRS is backlogged. I've seen some clients, it's taken pretty long time, 3, 4, 5, 6 months. And you can receive that refund in the form of a check. And you also can apply it towards tax deposits if you wish.
Okay. Okay.
And again, that will be handled via when you file the amended Form 941X, I believe you have the option there to either take the refund or apply it as a credit towards taxes.
So, and this is Doug again, all of the tax returns, both state and federal, would have to be amended, correct?
Federal would be amended in this case because this is a federal tax credit.
Okay.
So the federal return would be amended.
Okay. So any state that the employer did business in, well, it's an employer tax credit. So
it's a federal.
It only
it's
applies
a federal.
to the federal returns then?
Correct. It's a federal employer tax credit. This is IRS related.
Okay. So any of those returns have to be amended, and the accounting firm, whether it's Withum or somebody else, is likely to charge a fee for that amendment, correct?
So to speak for Withum, we would prepare the calculation, and then we would provide the calculation to the. So in the case where a client has a payroll provider, we would provide the calculation to the client. They would provide that to the payroll provider. We'd have maybe a worksheet and what the amended return would look like, and then they would amend. If the taxpayer needs an accountant or Withum or another accountant to amend it, the accountants can certainly prepare that amendment as well. So it depends on if the taxpayer is outsourcing payroll or if they're doing it in-house or if their accountant prepares the payroll returns. So it depends, but we have that capability.
So another question for you. Are all CPAs capable and qualified to apply for this tax credit, or does a taxpayer need a specialist to take a look at this?
I would recommend having a specialist or someone that's well versed in this because, we're talking about qualified wages as an example, but it's not just wages, right? There's family leave, sick leave pay. There's parts of if your PPP loan was forgiven, there's those wages that need to be looked at and carved out to get to the true qualified wages number. This was a simple explanation of qualified wages, but yeah, I would say I wouldn't have anyone look at this ERC. I would make sure that person or that professional has experience with the ERC because it is involved.
Okay, and then for the $1 million question, if the registrants on the webinar today have an accounting firm that does not have experience in this ERC, can they contact you, Sebastiano, for that expertise as it relates to the ERC?
Absolutely, they can. At Withum, we have what we call the SBA team. that handles employee retention credits and the calculation of, as well as looking at, we did look at PPP forgiveness when that was a hot topic. But we have an SBA team that we can definitely handle these ERC calculations.
Good. Good. Well, thank you.
Thank you.
I don't see any further questions here. We do have your contact information up. I'd like to bring up the poll at the end here. I do see an additional one that has arrived, the Q&A. Did you want to bring that up, Sebastiano?
Yes, let's see. Question is, if PPP Draw 2 covered period begins in April 2021, can Q2 ERC be taken between March and the start in April? Yes, again, we would look at the wages. So if you apply for the PPP2 draw forgiveness, we would look at the wages included in that forgiveness compared to all the wages for Q2 in this case, and determine what portion doesn't qualify, but that wouldn't disqualify you from applying for the ERC. So there's still some opportunity there.
Good. Well, for all the attendees on the phone today, I know this is a complex situation. I'm just going to share with you some personal experience. We have a very, very good accounting firm that supports my own business. And my controller and CFO decided to, based on the advice of the accounting firm that we use, reach out to an expert. We pulled in an expert to look at the ERC and realized a significant benefit. So I would say to you that I don't know who your accounting firm is today, but Withum has certainly demonstrated a fair degree of knowledge and expertise in the ERC, and I would encourage you, if your accounting firm doesn't have that expertise, to reach out to Sebastiano for more information. They may be able to help you in ways that your accounting firm cannot. We did that. We don't use Withum per se, but we found that to be the case. And in fact, in probably 30 minutes, I'm going to be going on a call with our accounting firm to look at our taxes for 2021 and the ERC implications. So I'd encourage you to pull in an expert if your accounting firm doesn't have that expertise. Sebastiano, you did a masterful job today. I thank you for your expertise and your time. Just to let everybody know that we can make this webinar available to you in the deck that Sebastiano provided here today. If you text us at 612-386-3898, probably within 24 hours. And you can listen to it there. And again, we'd be very happy to forward this on. So if you're interested in any other cost reductions for your organization, give us a call at 612-386-3898. Email us at strategicsource.com. We'd be happy to reach out to you and help you reduce your costs as you're looking at 2022. And I think David has got a poll up here. We'll turn it over to David. Sebastiano, thank you very much. Appreciate everything you did today.
Thank you so much, and thank you everyone for attending. Appreciate it. Have a great rest of your week.
Yes, I have brought up the post-session survey. We just love to get your feedback. You spent an hour with us, so we'd love to get your feedback on the time spent. It makes us better as we go over these results and as we develop each webinar. So we appreciate everyone's time, and we look forward to you joining us on future webinars with Strategic Source. Have a great rest of the week, everyone.